Now, the Nigerian equities market has sustained the positive momentum from last week, with key stocks in the banking sector catching the eye of investors. Abdullateef Grillo, Research Analyst at Meristem Securities, joins me to gauge key market drivers. Thank you, Abdullateef, for taking the time out to join us today.
Good afternoon, Esther. Thank you very much for having me.
Let's talk about market reaction. And of course, I know the market investors are digesting some of the comments and pronouncements made by the president at the inauguration speech. Talk to us how investors are processing all that was said.
Okay, so like you mentioned, investors have started reacting to some of the announcements at the inauguration speech. And even prior to this, throughout the campaign period, the government, which was eventually elected, came out to be, they seem very much to be pro-market. And you notice that since the beginning of May, we have seen that very high positive sentiment in the equities market. Even the weeks when the market closed down, you know that the sentiment in the market has remained positive. So we had the inauguration over the weekend, and some key takeaways as regards the economy. That was made at the inauguration is the removal of subsidy, which the president announced will be immediate or has even happened. We had the unification of exchange window and lowering of exchange of interest rates. And if you look at periods of transition in government, a key thing that investors keep their eye on is the policy direction and how it will affect businesses that these investors invest in. So like I said, the incoming government seems to be pro-market, and these policy decisions seem to favor a lot of businesses, because now businesses can get can access funds at cheaper rates, and then there's more transparency really in the oil and gas sector, and all of that is expected to bode well for businesses generally. And we saw that reaction in the market. We saw the market up about 4.9%, and the buying interest really cut across board. About 7 stocks across sectors gained about 10%, particularly in the banking sector. Almost all the banks were up. We had a lot of banks on full bid, and different stocks across sector too on full bid.
Now, I imagine, I do apologize for butting it. I imagine some of your clients have been calling you to perhaps ask for perspective, clarity. What are their concerns, and what have you been telling them?
Well, this had been anticipated, maybe not the magnitude, but the reaction really, because the government is pro-market, and when we have a pro-market government, it instills confidence in investors, and then the way investors react to this, because really what matters to investors is returns that they can get on their investments. And if these companies are doing well, if government, you can draw a straight line from the government making pro-market policies and policies that support businesses, so businesses doing well and returning good and delivering good returns for investors. So if the expectation is that over the next year or 2 years, or the time of this administration, businesses will continue to thrive and do well, then they buy into those businesses now. They position themselves well into those businesses now. And that's what we are seeing in the market. So it was expected that, okay, the government is going to be pro-market, and they are going to make policies that are going to really support businesses. And then what we look forward to from here really is the execution of these policies and some other announcements from the government that will further solidify investors' confidence and even attract foreign investors into the market.
Well, that was going to be my next question. Really? I do apologize. I thought you were done. So that was going to be my next question. We know that for local investors, we've pretty much held up this market for a while now. Can we expect, or should we expect, foreign investors to come back into the market? And if they do, what kind of positions would they be looking to take?
If you look at foreign participation in the equities market, as at the last FPI report from the Nigerian exchange, we had foreign participation at about 4% in the equities market, and this is the lowest that they have had on record. And even in absolute terms, in value, we had, I think, about 6 billion naira thereabouts, which is also the lowest there has been on record. So foreign investors have really shied away from these markets because of loss of confidence. They haven't been the macro fundamentals seem to not be strong as what is attainable in other markets. Then we also have the major problem, which is with repatriation of funds. And if the government is able to instill confidence in these foreign investors and also put policies in place so that when these these investors want to repatriate their funds, it is easier for them to do so. Investors are able to repatriate their funds when they need to, and they also feel safe investing in Nigeria as an environment. Then I think on the foreign portfolio part, we should see more investment, and even foreign direct investments, which have like a longer term view in the economy. We should see generally more foreign investors in the market. And also the government has announced that they're going to address another issue of foreign investors, which is the issue of multiple taxation. And if these issues are really combated, then I think we should expect to see more foreign investments, both foreign portfolio and foreign direct investments in the economy.
Well, thank you so much, Abdullateef, for talking to us today. Appreciate your time on the show. Thank you for talking to us. Abdullateef Grillo, Research Analyst at Meristem Securities.